We're going to have rising inflation. We're going to have skyrocketing fiscal deficits. So bigger budget deficits. We're going to have more supply of treasuries hitting the market, which, as I've said, are going to be monetized. I said the reason that the Fed is going to go back to quantitative easing, and I've said this since before they cut rates, when I predicted that the rate cuts would result in rising bond yields, I also said that eventually the Fed would end up going back to QE to try to get those bond yields to go down, because I knew that the rate cuts alone wouldn't be enough because they were inflationary and they were bearish for bonds.
The Fed might be facing a hard truth. Rate cuts alone aren't enough to tackle rising bond yields. Peter Schiff warns that we could see a return to quantitative easing as the Fed fights inflation's impact on bonds. But here's the kicker. While bondholders scramble, gold prices are quietly gaining strength, and the mainstream is barely noticing. In this video, Schiff breaks down why the gold rally is no accident and what the Fed's next moves mean for the economy. Let's dive into the real story behind the numbers.
So if the Fed really wants bonds to go down, it's going to have to buy the bonds itself. But of course, first it has to stop selling bonds, because that's what it's doing now. It's selling bonds, and a lot of other people are selling long-term bonds. You'd have to have your head examined to want to buy a long-term U.S. Treasury, even at 4.2%. Inflation is going to be well in excess of that. That's what the gold market is saying, loud and clear, except nobody is paying attention, at least, in the mainstream, because inflation is going to be much higher, and that's why the gold price is rising the way it is, and that's why bonds are falling, because inflation is bearish for bonds and bullish for gold. And so they're doing exactly what you would expect that they would do if you understood the predicament that the U.S. economy is in, and if you understand basic economics and finance, which, of course, nobody does if you're in the mainstream financial media, and most of the mainstream investors don't really understand what's going on. That's why they're not buying gold and silver. That's why gold and silver, even though they're rising steadily, they're not like soaring, right? Because there is no panic to buy. It's a very orderly, methodical rise that's happening day after day after day with minimal corrections. And you're not seeing any, blowout move in the mining stocks. Yes, finally, we have new 52-week highs, multi-year highs in the GDX and the GDXJ. The next key resistance is to really take out the 2020 COVID high. Even though gold itself and now silver, both metals are higher than they were in early 2020. Neither of the gold stock indexes, or there's more than two, but none of the gold stock indexes have taken out their highs yet from early 2020. That's coming up. That may happen this week. And then I think it's off to the races. By the way, I wanted to point out, as everybody is talking about how, the economy is stronger than expected, the only economic data points that have come out so far this week, Richmond Fed manufacturing came out today, minus 14. Bad number. Yes, not as bad as the minus 21 from the prior month, but it's another negative number. And it just continues this manufacturing recession. But also, I thought what was significant is we got the leading economic indicators for September, another negative, minus 0.5, which was bigger than the downwardly revised minus 0.3 from August. It was originally reported as minus 0.2, but they revised it and made it worse. And minus 0.5 was worse than the lower end of expectations. They were looking for anywhere from plus 0.1 to minus 0.3. But what's really significant is Joe Biden has been president and Kamala Harris has been vice president for 45 months. And during those 45 months, we've only had 6 months out of 45 where leading economic indicators were positive. And I think 4 of those 6 happened like in the first couple of years, right? So in the last 2 years, we've had 2? But 6 out of 45, that's 13% of the months have had a positive number. I don't think that's ever happened. I mean, I'm confident that's never happened over a 45-month period. That in any, ever since they started keeping track of these indicators. So how can we have such a great economy if the leading economic indicators have been flashing, recession for 87% of the months that Biden and Harris have been in office? So the idea that bonds are rising because the economy is strong, no. And in fact, I heard more people again say that, well, the strong economy means more inflation, and so that's also pushing up bonds. No, a strong economy would normally mean lower inflation because a strong economy would produce more, which would keep a lid on prices. It's weak economies that result in more inflation because they result in more stimulus. They result in more money printing. Government revenues go down, their expenditures go up, they have bigger deficits, they print more money. So weak economies are historically far more inflationary than strong economies. That's what's going on. It's not about a strong economy. It's about strong inflation and a huge supply of bonds for which there are few buyers. And I'm going to get to more of that after this break. We're going to talk about the BRICS summit, which is another reason I think that the dollar is going to come under a lot of pressure and why bonds are already under pressure. All the talk, though, of a stronger economy driving bond yields higher and causing the Fed maybe to cut slower than the markets had anticipated has caused some buying in the dollar, which bounced off. It was down around almost ready to break through 100. And now it's back above 104. So we've had a 4% rise in the dollar. It's been strong across the board against other currencies as it's been weakening against gold. But the fact that the dollar has gone up by 4% and gold has also gone up means that in terms of other currencies like the euro, the pound, the yen, the Aussie dollar, the price of gold has gone up even more than it has in US dollars, which is actually even more bullish for these mining companies because most of their costs are in Canadian dollars or Australian dollars or South African rand. So the profits of these companies are rising even more because in terms of their cost structure, gold prices are rising even higher than they are in dollars. But I think this is just a short-term phenomenon. I still expect the dollar to roll over and break below 100 and go significantly lower than that. Interestingly enough, Bitcoin has gone nowhere since my last podcast a week ago. I mean, it's been hanging out around the same price. Right now, it's around 67,200, but that's about where it was when I did my podcast. Now, over the weekend after I did my podcast, we did get above 69,000, which was a 6-month high. And then we came back down. But it's interesting. I'm watching on CNBC on Monday morning when gold is, gapping up to a new record high and silver's up. And not only did they not mention gold at all or silver on Squawk Box, but they did mention Bitcoin. They said, oh, look, Bitcoin's at a 6-month high. Big deal. Gold was at an all-time record high, yet it wasn't even worthy of a mention. Yet they pointed out that Bitcoin made a 6-month high. Big deal. So what? It hasn't done anything. 6-month high. There was a significant event going on in a significant monetary metal, yet they only focused on an insignificant event happening in nothing, in a digital token. And I was also watching, was it the next day, they were talking about, they had a guest come on. Maybe it was the same day, but this guest came on and he started talking about the melt up in the stock market and how like the stock market's just going to keep going up. It's going to melt up and you just got to buy, stocks are going to go up. But they ignored the fact that the market was actually melting down if you price it in gold, that the stock market was down that day and it was down this year if you measure it in real money. Now, I actually agree with what this guy is saying in that, yes, the stock market will likely keep rising in dollar terms because inflation is going to be so rampant. Yes, prices are going to go up. That includes the price of stock.
Thank you for watching. If you found value in Peter's insights, don't forget to hit that like button and subscribe for more deep dives into economic trends. Check out our other videos here for more on gold, the Fed, and what's shaping the financial landscape. Stay informed, stay prepared, and we'll see you next time.